This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Global energy giants including ExxonMobil Corp and Chevron Corp posted another round of huge quarterly profits, benefiting from surging natural gas and fuel prices that have boosted inflation around the world and led to fresh calls to further tax the sector. 4 of the 5 largest global oil companies have now reported results, combining for nearly $50 billion in net income, lifted by tight global markets and disruption following Moscow's invasion of Ukraine. The sheer size of the profits has revived calls from politicians and consumer groups to impose more taxes on the companies to raise funds to offset the hit to households, businesses and the wider economy from higher energy costs. They have also criticized big oil companies for not doing enough to raise production to offset rising fuel and heating costs.
OPEC is likely to maintain its view world oil demand will rise for another decade, longer than many other forecasters predict, in a forthcoming major report, despite the growing role of renewables and electric cars, 2 OPEC sources said. The OPEC is scheduled to update its long-term oil demand forecasts in its 2022 World Oil Outlook on October 31st. The 2021 version sees oil demand reaching a plateau after 2035. Another decade or more of oil demand growth would be a boost for producers and OPEC, whose 13 members depend on oil income, and would justify continued investment in new supplies. Consumers and governments urging efforts to curb oil use to combat climate change would be less happy.
Moving on to the top news in the energy sector.
Energy companies, hit by soaring power and gas prices related to the war in Ukraine, can secure public guarantees exceeding 90% coverage from EU governments to cover margin call requirements under looser state aid rules, the European Commission said on Friday. Energy suppliers across Europe have struggled with a liquidity problem in the face of record-high wholesale power and gas prices following Russia's invasion of Ukraine, prompting governments to step in to help. Utilities often sell power in advance to secure a certain price, but must maintain a minimum margin deposit in case of default before they supply the power. This has rocketed as energy prices jumped due mainly to Russia cutting gas supplies to Europe.
Russia's finance ministry has significantly cut expectations of taxable oil production for 2023, according to the draft budget for the next 3 years. In the expectation Western sanctions will mean an overall decline in output and refining volumes. Selling oil and gas has been one of the main sources for Russian foreign currency earnings since Soviet geologists found reserves in the swamps of Siberia in the decades after World War II. The draft budget anticipates Russian oil and gas condensate output at 490 million tons in 2023, 9.84 million barrels per day, BPD, a 7% to 8% decline from 525 to 530 million tons expected this year. Next, we have the top news in metal markets. Gold fell more than 1% on Friday as the dollar and bond yields climbed after data showed underlying inflation pressures remained high, cementing expectations around another hefty rate hike from the U.S. Federal Reserve next week. Spot gold fell 1.3% to $1,641.30 per ounce by 1:43 p.m. Eastern Time, 17:43 GMT. U.S. gold futures settled down 1.3% at $1,644.80. Consumer spending, which accounts for more than 2/3 of U.S. economic activity, rose 0.6% last month, the Commerce Department said.
Copper output in Chile, the world's largest producer of the metal, fell 2.6% on a year-on-year basis to 439,277 tons in September, the country's statistics agency, INA, said on Friday. INA said the drop was due to lower-grade ore and less processing during the period. Some copper deposits have also been impacted by less availability of water and operational problems. Global mining giants like Glencore, BHP, Anglo American, Antofagasta and state-owned Codelco all operate in Chile.
We will now look at the top news in the agricultural sector.
The United Nations on Friday urged parties to a UN-brokered deal that allowed a resumption of Ukraine's Black Sea grain exports to renew the pact beyond mid-November, saying it was needed to contribute to global food security. It also called for the full implementation of a related agreement to ensure grain and fertilizer from Russia also reaches global markets. We underline the urgency of doing so to contribute to food security across the world, and to cushion the suffering that this global cost of living crisis is inflicting on billions of people, UN spokesperson Stefan Dujarric said in a statement. That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.